Hey, everybody, this is Phil Town.
And this is Danielle Town.
Welcome to the InvestED podcast, where we get busy deconstructing and constructing investing via our great teachers, Warren Buffett, Charlie Munger, and many others in the world of, I would call it kind of value investing, but it's a bad name because really value investing implies you're just buying really cheap companies with low PE ratios. And what we do is just buy companies that are on sale. They could have a 40 PE ratio and I would still buy it if it was on sale.
And that are great companies.
Are great companies.
I think that's the key that people who don't know anything about value investing, when I tell them that at standing around somewhere and they're like, what the heck is value investing?
Right.
The idea that you would actually look behind a share of stock and care about what the company is. I mean, it makes sense to everybody. And it's something that they know sort of the basics of. But the idea that you would actually research and then plan to own the same thing and not trade it in 6 months when the price goes up. That's the big difference. That's
a huge difference because really what we'd like to do is own something forever that's just this great franchise that acts like a kind of a bond that grows in value, like a bond puts out, 5% a year, 4% a year. We like them to put out 20% a year and just grow forever with internal growth. That'd be awesome.
Yes.
Those are hard to find, by the way. But they're not hard to find. They exist, but they're hard to find on sale. They're hard to go buy them at a bargain sale. You have to be really super patient.
Yeah, it's a key point. God, I just look so tired today. I can't stop looking at my under eye bags. Jeez Louise. So now you're looking at me with great concern.
Yeah, what are you're squeezing your eyes?
I'm trying to put cold on the puffy because it makes the puffy go down under your eyes. Do boys not know about that?
No.
That's why you keep your under eye masks in the refrigerator.
Do I need to do that? I'm getting
you should probably
ugly
go around
eyes.
life doing that all the time.
Well, let's get going on something valuable for everybody here, hopefully.
Okay. Well, we teed up a rather, final exam sounding essay question at the end of the last one, which is, if you own a multinational, giant, has operations all over the world company that started, let's say for the sake of argument, in the U.S. because we're American, but you could equally say it for, a company started in Switzerland and you're Swiss, and they go off and move their headquarters to a different country in order to pay lower taxes.
Right.
Is that a good choice as owners?
As
people who are going to benefit from that company making more money?
Right. So a couple of real important facts. First, U.S. taxes on corporations have been, by world standards, very high for very long, until Trump was elected in 2016. And in 2007, in fact, the taxes were at 35% plus state taxes. So for corporations, typically they were paying over 40% between state and federal. In an environment where internationally tax rates were averaging in the low 20s. So Trump passed a law that he hoped would make U.S. corporations more willing to stay home because many of them were leaving the country to seek out tax havens like Switzerland, where you live, which has 9% tax rates on corporations.
But it's hard to get. It's more EU. But if I
Ireland
can stop
just
interrupt the history of recently. I mean, I think the big time that all these companies were leaving was more like, when was it? Like the 2010s. And generally corporate tax rates, and I'll get this slightly wrong, but they're not generally ending up at 40%. Most giant corporations, if you look at their returns, actually end up paying something like 30, 35, 25, somewhere around there.
Well, trust me, when they moved it to 21, it made a giant difference.
Oh, it was a huge
of
difference.
Corporations.
Yeah.
And one of the places where it impacted the most was in corporations changing the, changing the math about whether they should stay in the U.S. or not. And
for companies that were still in the U.S.
Yeah, now these are U.S. companies who may have been planning to leave the United States, and then with the massive change in tax laws, I dropped it in 2017 from 35% to 21%. They changed their minds and stayed.
Apple moved to Ireland way before that. It had nothing to do with that particular tax.
Apple didn't move to Ireland. They just moved some of their operations to Ireland.
That's correct.
But other companies absolutely moved to Ireland. They packed it up and left. I mean, big ones. AbbVie, big pharmaceutical company, moved to the UK. Medtronic moved out to Ireland. Chiquita Brands moved to Ireland. Talk about homegrown. Burger King moved to Canada to get away from taxation. Pfizer was trying to merge with Allergen and moved to Ireland. Mylan, another pharmaceutical, moved to the Netherlands. I can go down the list.
It's tons. And there's a couple of reasons for it. So one is straightforward taxation. Their operations are still the same. They operate in the U.S. They pay taxes in the U.S. It's about moving the headquarters to a place where then they pay a separate kind of, where we're located kind of tax, homegrown tax, that's lower than it would have been in the U.S., and two, that it gives them access to the EU market as a local EU company. They're not choosing Ireland. Sorry, Irish people. They're not choosing Ireland because they love Ireland. They're choosing Ireland because it's in the EU and it had the most favorable tax treatment of the countries in the EU.
And now the EU is essentially suing these corporations to put their thumb on Ireland for doing that.
Yeah.
And they just won in a court. They just won a $13.8 billion settlement against Apple. And if that sticks, then one would wonder if they're going to go after every single one of these things.
Well, and it's not just absolutely. And it's not just because of the taxes, like with Brexit. So many companies have had to leave the UK in order to stay in the EU, in order to keep the main headquarters in the EU. And they've had to move, a lot of them moved to Amsterdam or Ireland, just to make sure they're in the right spot to be have the most advantageous distribution and tax treatment. So it's for taxes, but it sort of feels like this revolving door of like, okay, where are we going to have to go in the next 10 years because the governments are going to change things again.
Yeah, they'll just all
kind of
move
how
out
it
of there.
goes.
It's so interesting why these governments don't understand that when you tax something, you get less of it. It's just that simple. And that today corporations are I don't know if the word is fungible, but the idea is that you can flow and move and they're not stuck in one place. And these tax changes are so dramatic. And by the way, they're coming up in the presidential elections in the United States now. Harris is arguing that she wants to move the corporate taxes from 21 to 28%. And that could start the whole thing going again, because I'm not sure what the corporate, math is to where you decide, it's worth shifting our headquarters. But,
exactly, because there are a ton of costs associated with that. It's not just we're going to snap our fingers and we're going to move.
Right.
It's a huge amount of money and time and energy, which is money in a company, to move something like that and people, etc. So it's a big deal.
If she wins, we're going to get to see where the dividing line is, because since 2017, I mean, there were U.S. corporations moving out literally by a dozen a year, big corporations. They were bouncing out of the U.S., and there has been none since that tax law changed. None. So that is extraordinary. If you thought these corporations might be moving out for some other reason, that pretty well settled that issue, because none have moved.
There's got to be like some, right? Like,
none. Nobody's gone.
Maybe there's one. None.
I'm saying
I have done a thorough search.
With AI.
5,000 companies
never
that
lie.
Are on the, yeah, AI would never lie.
And also, since that tax law was implemented, there's been a repatriation of billions of dollars into the U.S. since then. And that's the other side of this thing, is rolling out. It's not just we're moving our corporate headquarters. It's that, we're leaving billions of dollars outside the United States, because if we brought it back here, we would get taxed on it.
Yeah, as a more topical situation. But don't you think, as a general principle, which is for me what matters in like my investing checklist and my investing story, this is going to keep happening, like, and probably more and more often, because governments change their taxes, governments change whether they're in a certain voting bloc, governments change who they're at war with, etc. So things change, and companies have to respond to that, maybe by moving. So I guess what I'm wondering, like, from an investing point of view, is how much does that matter?
Well, to our original question, right?
Yeah, exactly.
I mean, what do you, as an investor, as an owner, forget about being an investor. Think of it as being an owner of a business. This is always our fallback. If you haven't already figured that out, you're in the wrong seminar, because this is the place where we truly believe we act and think as an owner, not an investor, not a trader. We're owners. And when you start thinking as an owner, certain things change quite a lot. You start to have an idea of how your company should behave, just in terms of how it should behave toward its employees, in terms how it should behave in terms of its compensation for executives. You start to have an opinion about these things that you wouldn't necessarily have at all as someone who just holds a piece of paper and hopes that the value goes up.
Yeah, because I'm watching the people make those decisions in real time on my behalf. And on your behalf. In other words, if you believe in karma, you have the karma of the company that is operating on your behalf. Mm-hmm. And I mean, really, if you think you can own something in the world, I mean, just to put it in real stark terms, what if you owned something that was just like child slave labor, just to make it really horrible. Okay. And you were starving them and just replacing them with new children as fast as they dropped. Got it.
And you own that, but you own it. You live in the United States, and it's it's a minority ownership. You only own 10% of it. Really, it's not something really you would be criticized for, should anyone find out that you own 10% of a slave plantation making munitions for, China or something, right? I mean, nobody would care if that was front page New York Times, that Danielle Town owns 10% of this horrible company. Yeah, right.
Is this sarcasm? Okay.
Yes. I hope you picked that up.
Trying to catch on there.
Yeah. So you think about it like that. Why would you think any different if it's the same company and the same morality, but you own a fraction of 10%? Why is that different?
Absolutely.
Right? So you
hence
get the
rise
of
of social investing, right? I think
hence the
more and more people
the rise of
are
ESG.
deciding that that's important to them.
Yep.
And by the way, a lot of people are deciding it's not important to them as well. And they're like, I don't even want to know what that company is doing. I'm not going to find out. I'm going to turn a blind eye. And I'm cool with that, even though I only owned it for 2 hours because I'm trading. I personally don't appreciate that kind of behavior, but a lot of people choose that side of it. But I think especially when you are confronted with what you own for a long period of time, like it's not just 2 hours, it's 2 years or 2 decades. The sheer amount of time of learning about the good and the bad and the gray areas that every company and every person has to deal with, I want that time to be profitable in all ways. Like I want that time to feel useful to me and profitable, and like I'm learning something, and like I'm aligned with people who are making even better decisions than something I would have thought of. Like that's it, just for pure experience. I think there's a strong argument for choosing a company that does something your values align with.
And let me ask you, what do you think about this? Because a number of companies have been backing off of the diversity, equity, and inclusion world. Like, for example, Tractor Supply has just recently gotten rid of its DEI initiatives, and a number of others have as well. Do you think this is being driven by investors that don't want to deal with the moral issues there, or that it is in itself a change of mind about what is the correct view of the moral issue? Any idea?
I don't know what's going on with those companies, so it's hard for me to answer.
Well, it's really interesting.
What's happening with them exactly? I mean, I think a lot, as we've all experienced, programs or things with titles don't necessarily mean that anything's actually happening, that anything's actually changing.
Or
so that
opposite.
could be one side of it, which is like, it just was not useful to them and it was a waste of time, maybe. I don't know. Or they decided they don't want to be the kind of company that focuses on hiring non-white, non-man people. So I don't know.
That's interesting. You think that's what DEI is? Hiring non-white, not men?
What is DEI? I have no idea what DEI is.
Diversity,
Assuming
inclusion,
it's
equity.
diversity.
Equity. Yeah,
Okay.
diversity, equity, inclusion. Yeah. I mean, here's another view. Rather than saying that it's a decision to not hire a specific group of
I just
people,
said
which
I don't
sounds
know what the
racist.
decision is.
Right. But let's say that they did decide that. That would be racist and misogynist, wouldn't
No,
it?
not necessarily. I think.
Sure it would. If they decided it specifically, we're not going to hire white people. That's racist.
I mean, that's actually illegal.
Right. But they have done that in a number of places under DEI. They decide our next hires are not going to be white people. They actually literally said that. So there's a lot of
highly
blowback.
Unlikely.
No, it's not highly unlikely. Look it up.
Yeah, I would.
Okay, go look it up. So companies have gone maybe a little too far in their desire to right the ship in some way. Which is understandable. But with, let's say, Tractor Supply in particular, they ran into a buzzsaw because they're a very significant, I would say majority, and I'm pretty sure I'm right, the majority of people who shop at a Tractor Supply store are not gung-ho on some of the aspects of DEI. They are very much opposed to those things. So the company saw this blow up in its face, and its own shareholders and customers blasting back at it for this, saying, these are not my values. And if you continue with this, I'm not shopping there anymore, and I'm not owning your company anymore. And they dropped that thing like a hot potato.
So they've had actual large shareholders leave the company?
No, they had large shareholders demand that they get out of DEI.
Like in a shareholder meeting kind of thing.
Like in letters to the CEO. And the same thing with customers, just going, if you keep this up, I'm not shopping here anymore. So I mean, look at Budweiser. They put that the trans person, somebody on there, and immediately had their sales go down by some massive amount in bars all over the United States. Like gigantic blowback from Budweiser drinkers. That these are not my values. And so the point being...
The point being, what do you do as an owner?
People are absolutely more aware of the relationship between their personal values and their money than they have been ever before.
As a consumer, absolutely, yes.
Isn't that amazing?
100%.
And what we've seen is that a certain number of companies have come out with, I'm thinking mutual fund companies and ETF companies, have come out with proposals with funds that are supposed to reflect this new consciousness. ESG funds, DEI funds. And what the mistake they made is thinking that everybody thinks like they do, that their values are synonymous with the values of the country. And therefore, when we come out with this ESG fund, people are going to flock into it. And they found out rather the opposite happened, is that they discovered that the values of people in America are quite divergent.
That's not what's happened with ESG. I mean, I'm with you on a lot of that, but as far as ESG funds, they've been incredibly successful from people wanting to own them. Have they done as well as other funds? I don't know. Maybe not. Maybe that's why people are leaving.
Well, they haven't done as well as other funds. There have been a number of articles out about that.
Yeah. But I think ESG does not, ESG stands for,
environmental, social governance.
Environmental, social, and government. Good job, Dad. Thank you.
And it's a crock, frankly.
And what they did is try to put together a set of requirements, essentially, that if you do these things, we consider you to be a good company.
Right.
And I don't think that anybody, maybe you did, I didn't think that was trying to represent me or my values. I thought that it was a bunch of people saying, like, here's what we've got. Join it or not. Like it or not. And, lots of people did. Some companies opted out. Like, remember, we talked a lot about Berkshire utterly opting out, simply not filling out the forms that were required by these various, there's like an ESG sort of overarching watchdog that then distributes the information to the various funds. And they require the companies to fill out forms about their governance structures, etc. And I remember Buffett just being like, we didn't do that. Which doesn't mean that they weren't doing the things. Maybe they were, maybe they weren't. But it means they didn't fill out the forms and decided it wasn't worth their time as a profit-seeking organization.
Oh, man, that was so heinous, that whole thing. And I hope it goes burning down to Hades. Yeah, it was heinous. It was a bunch of New York, a handful of really powerful New York companies determined what was correct for ESG, as you just said. And then here's what the heinous part comes from. If you don't fill out our little form, then you don't get a score. And if you don't get a score, then our mutual funds can't invest in you, and neither can our ETFs. And oh, by the way, we control $20 trillion.
I mean, they could do that. It's like pure free market economics.
They did do that. Yeah. And so a couple of things popped out of that. And that is, number one, these ETF funds like BlackRock have way too much power that people didn't know they were giving them by handing their money over to an ETF. They thought it was just this neutral
which has nothing to do with ESG investing.
Has a lot to do with it. These guys were forcing ESG on companies like Berkshire, and Berkshire didn't just go, oh, well, we're just not going to fill out the form. Berkshire went, we're not going to fill out the form, and we don't give a damn if you don't invest in us. And if we don't give a damn if our stock price goes down, screw you if you're trying to pull that game. And that is exactly the game they were trying to pull. This is something you feel really strongly
about.
Oh, it was blackmail. Because 100% blackmail.
I don't think that it is in any way blackmail.
What are you saying? You got wait a second.
Like
you
they have a secret and they were trying not to let it out.
No, they were saying, "Do what I."
No,
okay, what would you call it?
Do this, or we won't invest in you.
What do you call that
fair.
when I put a here? What do I call it if I put a gun at your head and say, "Do this," or I'm going to pull the trigger? What do you call that? It's not blackmail. What is it?
No, that's a life-threatening situation.
Oh, give me
and
the name
that's
of it.
not what this is.
Yes, it is.
This is
if you
fill
run
out
a
these
normal,
forms and do these things,
bullshit.
or we won't invest in you.
Totally wrong. This is a company with enormous power. They might own 15% of your company.
Yeah.
And they are saying, do ESG or I'm withdrawing my 15%. Now, if you're not Warren Buffett, if you're a CEO of a company and some large group says we're going to pull 15% of the money out of the fund, you know what happens next. You get fired. So this is a gun at the head of CEOs all over the country. Absolutely.
Let's say that's happening. It reminds me of the divestment protests against apartheid. It's the same kind of thing, much less important. Essentially saying we are voting with our money and we want you to vote with your money and you're voting wrong. So if you don't stop voting wrong, I'm taking my money back.
No, we're not voting with our money. They are a collection of investment from the California Teachers Pension Fund. They're the firefighters from Minneapolis. These guys have collected this money under the guise of an exchange-traded fund, which has no affirmative pricing power. We're simply buying the index, whatever happens, right? Mm-hmm. But if you don't do this, we're taking you out. We're taking you out of our view of this thing.
Buy a different index. What's the problem? There's a lot. There's a non-ESG index fund.
Biggest problem. Let me put it like this: Delta Airlines, American Airlines, Southwest. They're falling in line with this stuff because those CEOs don't want to get fired. They do not want to see BlackRock sell off their corporation. And so it was, I mean, you put it like Buffett just casually, said, nah, we're just not going to do this. No, Buffett has enough integrity and enough power at Berkshire that he could watch that stock go down by 50% and not bat an eye.
Yeah, that's absolutely true. You're right. I made it way too light of it. Yeah, totally.
And who else can do that? Almost nobody. So that's why I'm saying it's a gun at the head. Yeah. Well, they didn't want to find out, so they dropped onto the DEI. Exactly. So when you see companies like Tractor Supply getting out of it,
the California Teachers Association cannot invest in BlackRock if they don't like that BlackRock is trying to make these companies meet certain requirements. Great. Take your money elsewhere in a different index. Yeah. Well, what if California Teachers Pension Fund manager thought this DEI stuff is great? I mean, that's the whole problem with funds. Hello, yes. Blinking red light. Somebody else is making the decisions. And I probably don't like them all the time. Yes, exactly. That's why I want to invest my own money. The end. Well, there we go. We have landed here in this podcast. I'm mystified by how this is some sort of horrific conspiracy. It's just incentives. It's just people putting their money where they want to, and that incentivizes other actions. And if people don't want to incentivize, what it really here's the X requirements, take your money out. What it really is the horrible effect of people not having a clue what they're doing with their money. That's what this really is. That is the vast majority of people in the country having no idea what's going on with their money. They're sitting in some
business that's got some retirement plan, and they show them 47 different things they can do. They don't have a clue about the differences
Totally
between
true.
them.
Yeah.
And then they just go, I don't know, just put it in something diversified. And those managers do that. They also have basically no clue. And then they just stick it over with BlackRock in some fund. And BlackRock has a big clue. They're like, whoa, look at all the power we have all of a sudden.
Yeah, that's all. Yeah,
Yep.
absolutely.
And so this is...
And we're going to try to
basically-
do something with it.
And we're doing something about it in this podcast.
And
by
no.
George.
We, BlackRock, are going to do something with our power. That's what
Oh, yeah.
they literally
Oh, yeah.
were like very open. Like, we're going to try to make companies change. And
Yeah.
some people very much support that. And other people very much don't. And I think
Well, I tell you why they should very much not support it is because you're not talking about the will of, 75 million people here. You're talking about the will of about 8 people.
That's literally what fund investing is.
Yeah, but that is crazy that 8 people are making a decision about what happens to the stocks in America. That is nuts. So my view is, okay, first thing is we got to fix this.
The big companies have way too much power.
If you run an
banks.
ETF,
Yes.
you don't get to vote on anything. It's an ETF. You're not making any active choice whatsoever to be in this business, so you get no vote. That should be absolutely what they do that.
I mean, there's a strong legal argument out there about that. Yeah. That's not a novel idea.
Good. We should have that happen because otherwise, and you guys who are listening to this, you need to take a look at where is your money and who's voting it for you and what are they voting for?
That's the whole point. Yes. And anybody listening to us and me trying to sort this out with you and learn is somebody who's excited to make their own decisions. Like, this is the whole point is I've sat in that room with the person who shows me the list of funds that I can check the box if I want to put my money in or not. Mm-hmm. And you go like, well, here's a bunch of names. This one's called like the Wealth 500. Oh, that wealth sounds good. Like, there's no information. Right. And it's awful. And this is like the origin story of my investing life. Like, that is what happened to me. And I had no idea what to do about it. And thank goodness I had you and enter, the last 10 years. So there's lots of people who want to know what their money is doing and be able to make their own choices. And I think the beautiful thing, hopefully, maybe it's in a little bit of a up and down mess right now, but hopefully we'll get to the point where as more and more individuals are moving their own stock ownership around, and I say that intentionally, not company ownership, because for a lot of people it is just stocks and they don't know that much about necessarily what they're owning and they don't intend to own it a long time, but they're doing it themselves. So hopefully it gets to the point where the people doing that stuff are fewer than the people who are excited to own something for a long time, which then incentivizes companies in a way that I think is, sorry, now I'm on my soapbox, in a way that is not talked about, which is if you have long-term shareholders, like Berkshire does, this is how you have power in the market, because you can make unpopular decisions and everybody still sticks around and you don't lose your job and you don't have your share price fall in half. If the people who own the company agree with that decision, they can be unpopular outside, fine, whatever. But you've got stability in your company. And that is something that public companies right now, by definition, don't have. And it makes them behave differently. It's all incentives.
Yeah.
Yeah.
I agree with that.
Okay. Long-term shareholding is a big deal. That's why I look for family-owned companies. Like, they may not, a lot of them are not great, but if you find one that is good,
yeah,
it's a different perspective on the ownership than anybody else has. It's people who are acting on behalf of their forefathers and for their children, if they're looking at it the right way. And that's the kind of view that I have and that I hope other investors will have. We have not even gotten around to answer if we should hate companies that leave America or love companies that leave America. Maybe we can talk about it next time.
Yeah, next time. And I'd like to add to that. Should we hate companies that are getting big and huge and international in favor of local businesses?
Oh, well, that's hard to do with public company stock investing.
Well, let's talk about that too. Okay. I'm interested in what you think. All right. So until then, time to go play.
Thanks, everybody.
Bye. Whew. Yeah. Whew.
We got to stop debating. I like to learn.
Every once in a while, debating's all right.
Every once in a while. Stick with us, guys.
See you guys.
Okay. Thanks, everybody. Bye.
Bye. Hi guys, thanks for listening to InvestED. If you enjoyed this episode and you want more information or to listen to additional episodes, visit our website at investedpodcast.com and sign up for my virtual workshop right there. Spots are definitely limited for this event. I'm not kidding, they really are. They sell out very quickly. So everything discussed on this podcast, by the way, is either my opinion or it's Danielle's opinion. And really important, it's not to be taken as investing advice because I am not your financial advisor, nor have I considered your personal situation as your fiduciary. So remember that. You're on your own here. This podcast is for your entertainment and education only, and I really hope you enjoyed it.